Hey guys, what's up? It's been a little while for streams. Tonight we're doing Fintech Friday. A little bit later, we're going to start with Market Madness. So of course, we're going to have the madman himself, Steve. How you doing?
And guess who we don't have?
Somebody's late.
Oh,
Really
he's going
late,
to be infinitely late.
but we also have another special guest, and data-driven investing will be joining us, by the way, in about an hour. We'll focus more on fintech at that point, the SOFI Robinhood. But we have another special guest as well. Everybody say hi to Evan, Stock Market News on Twitter. If you don't follow him, he is an incredible resource if you're trying to figure out what's actually happening in the markets. Post the news as it happens. Evan, how you doing?
I'm doing well. I heard you guys were going live. I heard Tanner Flake live on the stream, and I was like, I want to come hang.
He's just really late. He might be a week late. I don't know, but yeah.
Sunday, 2 days.
Anymore. I mean, I called him to see where you.
To be fair, Friday at 10 p.m. is a rough time. That's a rough time. Who decided this?
I think Tanner.
And it's been for years.
Yeah, I don't know. I kind of got stuck in this. So I was at, this used to be SoFi Weekly, and I wasn't on that at all. Amit was on there. And then when Amit pivoted away, they're like, okay, not nearly as good, but we'll get somebody, I guess Roy. So I got thrown in on there, and no, but it was already like kind of an established time, and so we just kind of kept it, and it works for those that are here. It is a later time, especially when you've been traveling. I'm really tired, but I was like, dude, I have to go live tonight. Wanted to say hi to the community. Steve, since you're up for it, and then Evan, I'm like, oh yeah, let's do it. Data-driven investing, so this could be fun. All right, Steve, what's up, man? What's on your mind?
Two things. S&P 7,000 is going to happen. Whether it happens this year or not is a different story, but it is going to happen, and I do think it's going to happen this year. And NVIDIA, which I did something I guess boomers would do today. I tagged a bot because I have been blocked by Sir Joseph Carson. He doesn't want to have an intellectual conversation with me. He blocked me for spitting facts. And I want to see what he thought of my new NVIDIA article. Man, I tagged a bot.
Yeah.
I'm going to start calling him Sir Joseph Carson because he deserves it. He's Sir. He's better than me.
Yeah, I like him. Beef sometimes happens. Hopefully, you guys get it settled. I like the discourse between you guys. So let's start there then. Talking about SoFi to 7,000, macro as well. Like the biggest your thing that kind of hit the macro was that massive jobs revision of nearly 1 million jobs taken off. Of course, jobs numbers came out, unemployment came out a little bit hot. Evan, are you thinking, I mean, obviously we're in a bull market. Like, I don't think anybody can dispute that. SoFi to 7,000, does that sound reasonable to you at some point over the next, 6, 9, 12 months? Nobody's making a prediction, nobody will hold you to it, but what are your thoughts on that in the macro overall?
Are we saying SoFi or SPY?
Yeah, you just said SoFi.
Not SoFi. Sorry.
If I'm tired. 7,000, I'm going to be buying a couple of items.
My response was going to be if open doors at 100, and SPY maybe. I don't know. I don't know what market we're in, but
yeah, if SoFi goes to 7,000, something is either really right or really wrong, or maybe both. So, yeah, SPY to 7,000. Does that seem reasonable to you, like over the next 6, 9, 12 months?
I don't think that's a crazy statement at all. This has been a Teflon market. We've gotten everything and anything thrown at it. So I like. There's no way you could rule that out. It's definitely not a crazy number. Now, when you look at like 20%, like with how the S&P 500 has returned over the last couple of years, like, yeah, you can make all those arguments, but I mean, it's definitely not a crazy number. I'm kind of stupid. I just wanted to hang out with you guys. So, I mean, I'm just going to give you the thing. BMNR to 7,000. I genuinely, I also have heard Steve talk a lot of really great things about BMNR, so I'm excited for that. But
we're going to talk about that for sure.
I think that, listen, you look at what's been thrown at this market this year and how strong it's been and how resilient it's been. Yeah, I don't know. There's just a lot of cross currents.
Yeah. So Steve, why are you saying SPY to 7,000? Like what nothing's guaranteed, but like what gives you the confidence to say that?
So I said it on December 31st. when Amit and I did the stream for ushering in 2025, I said S&P is going to 7,000. And when we were in April on the Sunday night stream and the S&P was at 48 something, I said it was the bottom. I can't time markets, so don't think that like I can predict this stuff all the time. I just look at macroeconomic factors, and I read a lot of earnings reports. Like a lot of them. I invest in a lot of companies. I try to keep up with at least half or 60% of the companies that I'm invested in. And when I say that, I mean actually read the full press release, read through the earnings report, and read through the 10Q. And I am seeing earnings expansion and CapEx expansion. I put some graphs in the NVIDIA article, and I said my theme for this year was that the bigger companies are just going to get bigger, and when the market digests all the turmoil from the trade war, it's not going to matter. Now, I thought the Fed would have started cutting in May. I was hoping they cut in March, but the big thing is unemployment right now. We're getting really drastically close to a number that I don't want to see.
Yeah.
But I think that the Fed's going to have to cut by 25 bips. I want them to cut by 50. They're probably not going to. But you're going to have some real big tailwinds coming in when they cut by 25 bips, because now you're ushering in several cuts for this year and a lot of cuts for next year. And what does that do? It takes defaults off the table for a lot of real estate businesses, lowers the cost of capital, incentivizes expansion, and it creates margin expansion because now the carrying cost of debt is less. So what does that mean? Well, if companies are expanding, you need more Microsoft Office accounts. You need more supplies from Amazon. You need more cloud infrastructure from Alphabet, Microsoft, or Amazon. You need more advertising from Alphabet and Meta. You need more computers. You need more of everything. And then when you go through NVIDIA's earnings report, Jensen said in the next 2 years, he's expecting the big four to be spending $600 billion a year on CapEx. And then when you look at what Oracle just put up, they're expecting and they came out of nowhere with this.
Oh, yeah.
CapEx to $37 billion this year or next year. And then you look at CoreWeave, and their backlog is up 81% year over year in Q2. This is a train that's not stopping. Earnings expansion continues, and I'm not seeing anything that takes the market down unless we go into recession. And while unemployment's ticking up, I don't know if we're there yet. And right now, I think things look good.
Yeah, and I'm with you too. Like, I think obviously the bull market's intact. I think that will probably be for quite some time. Every single time, like, bears always sound smart, and there are some things that are not perfect, that are far from perfect. One of those, of course, is jobs, jobs report, the revision of the numbers as well. A few others too, but there's a lot going right too. It's very clear that has a big impact. Now, what is happening this next week is very significant, and Evan, I do want to talk to you some on the Robinhood conference too. We'll talk some BMNR here in a bit too. This CME Fed Watch, and of course I believe it was executive president of the Fed Watch was at the Robinhood conference. He mentioned and said, if we don't get cuts, like, valuations are way too high, things are going to fall. On a global scale, there will be a lot of people and players hurt as well. Well, the
Pretty
good news
sure
is,
when you look at the statistics of this, like within a week or something, it's like at this point it's like 100%.
Yeah,
they're cutting.
So we're at
93.4%
of one cut. This is next week, or 6.6% of two cuts. Now for the end of the year, we are looking at we're right here at 425 to 450. This has actually shifted a lot. So almost nobody says one cut. Not even that many say just two cuts. The consensus right now is three cuts. That can shift around a lot. We see the shifting right here that a month ago was 50-50 for three cuts, between 2 and 3 cuts. Now it's overwhelmingly this. A lot of it is the weakness that's in the jobs. Powell, of course, is a lot less or a lot more dovish. And do you guys think that we're going to get a surprise? Actually, let me just ask you it this way. What do you think Powell does next week? 1, 2, or something else?
I was going to default to the smarter person in the room.
I was letting you go first, Adam.
Okay, we'll start off slow and we can get the bigger one. Honestly, I think he's clearly going to do one. Powell's not going to come in here and give any president a break and give him 2. I think it's just what he's going to say. I think the press conference will be really interesting. Like I think kind of what you were saying, Steve, is like this. If he signals like, I don't know, Thursday's data points, just a combo of jobs data coming in week and inflation data coming in week. I was busy that day, but I'm sure it was a lot of stagflation comments on Twitter all over the place, even though it's way too early.
Yeah. I mean,
so
that's
is he going to
fear.
signal? Is he going to signal this is the start of something, or is he just going to say data dependent? Next meeting is live, but I don't know. I want to hear what he says.
Steve, what are you thinking?
I think he's just going to do 25, but remember, he's only 1 vote. Now, it's about where his influence is. So is his influence going to carry over to the other voting members? So I think ultimately the Fed in a whole is going to do 25, but at the same time, when they started the cutting cycle, they went 50 out the gate, if I'm not mistaken. So it wouldn't be out of character for them to do it. I just don't know if they're going to. Now, the latest jobs report and unemployment ticking up to 4.3 is a reason to cut 50. And when you go look at the Fed Watch tool and you go out to the end of next year, it's been bouncing around a lot. Yeah. But, some weeks it's 3, some weeks it's under 3, some weeks it's just over it. But I am very worried about the next 10 years. I'm very worried about unemployment going up to a number that's unmanageable. And I think the only way that we can combat that is by having an environment where people are incentivized to start businesses. Because AI is going to streamline a lot of things. Robotics is going to streamline a lot of things. Full self-driving is going to hurt trucking and livery. I want lower rates for a lot of reasons, not just for the housing market, but we need to incentivize entrepreneurship. We really do, because that's going to be the biggest way that we combat whatever we're going to face from job loss from AI and robotics.
Yeah, I think that Powell will probably do 25. To his credit, I've not always been his biggest fan, but he's done a good job of forecasting basically what the Fed is going to do. So there have been, essentially since they've been after the transitory debacle, after that, they've been very clear on what they're doing, why, when, and when they shift, they forecast that as well. So I think 25 is probably already priced in. I'm sure the market initially will give a little pop no matter what, because rate cuts are back on the table. Maybe I'm wrong. Maybe it'll keep going up. 50, I don't think is. A few people are saying yes, and we'll have to see what happens. If we get 25 and we fall, that's fine. Some people are saying 50 is bearish. I don't think it's bearish. If it's an emergency rate cut, it would be very bearish. If they do 3, they're not doing 3. Like nobody's expecting that. So, yeah. So we'll have to see. But yeah, rate cuts are back on the table, guys.
What you said there, though, here's what I feel like is going to happen. We're going to get an initial pop up like 1-2%. In that next 30 minutes, it's going to dump all the way back down to about even. Powell will probably say, and then whatever direction it will actually go is going to happen during the speech, but we're going to get that pop and we're going to get that dump. There's that don't trust the first FOMC move. It's back. It's going to be back this meeting because the last couple were so dull. There was no reason to even think about doing anything at 2 p.m. Eastern.
Yeah. No, yeah, we'll see soon enough. So, of course, the market will always react in extreme initially, no matter what direction it's happening. But I see a couple of comments by other people asking where Tevis is. I forgot to mention that too. He's been doing some travel in different time zones recently. So I think that ends fairly soon. So we'll probably get back on schedule. But this is a tough time for him. We weren't able to shift around because I was flying, returning from. We can say it with Evan. We got to tour the Palantir offices. We met Eliano and Uncle Chad, Chad Walquist as well. Got to ask a lot of questions, and I'll be doing a video on that specifically. Some things that I learned, some things like they gave me some merch, which is always.
I'd like to interject for a moment.
Okay.
I just realized something. The two of you were at dinner with him.
Yep.
Yes.
I
And
was
the
sitting
two of you
right across from him. I got a good photo. of it.
allowed him to order a steak that came out that gray. I want the names of everybody at that dinner. I want the email addresses. I want to send a mass email in protest. And you allowed him to wear a hat. What is going on here?
So Evan sat right across from him. I was on the other side. So I am excusing myself. This is not my fault. I'm only one man. But I agree with you, Steve. It's wrong. Now yours was a little bit blue, a little bit.
No. The Ben and Jack's was dark inside. You've been there. We sat in the back. It was dark. It was not blue.
So here's what I'll say on the hat. Transparent. When you have aura, you can make stuff work. I honestly don't think there's a problem with the hat. The steak's crazy. The steak was ridiculous.
It is. Yeah.
Honestly, he had 2 Shirley Temples. He actually asked the person next to him to guess his star sign or his zodiac sign or whatever. That was a fully true post. It was a very funny. It was a good time. And yeah, I got a great post out of it. Sometimes you live life for the content.
I don't understand. Next time I take everybody out, I'm ordering a porterhouse for however many people are there, and I'm just going to get it medium and be like, no, don't bring him anything else.
I'd be happy.
Medium rare. I used to be medium, and I got myself to the right place.
I do medium rare, but if I'm going to force it on him, I'll order it medium. But
the photo you tagged in was raw. That's a little too much for me.
No, Matt and I both had it the same way. It was fine.
It needed a little more time. But yeah. I mean, that's better though than well done. So, but I absolutely joined, and I am very happy for Amit ordering the Shirley Temples because I was like, that's a great idea.
I don't have a problem with that. If he enjoys that, I don't have a problem with that. But the steak well done like that wasn't medium well. That was well done. That was just crazy, and I'm shocked the chef even allowed it to happen.
I guess it's one day we'll convert him and he'll join medium rare or at least medium. I
got him on the ETH train. Maybe we can get him on at least the medium train.
What a BMNR day.
Yeah,
what a BMNR day.
Today was a good day.
So Steve, you're in the cult of BMNR as well?
I'm the leader of the cult behind Tom. What? No, yeah, I'm in it.
So I got to show you this real quick. Tevis did this. I don't know if either of you guys saw this. This is great. So Chris Patel, by the way. So I guess first, real quick, at the Robinhood conference, Evan was there as well. We were spreading the good news of BMNR to any that would join the cult. Some did, and Chris Patel was one of those too. So this is Chris, saying initially, here's his post. That he's jumping in, he blaming Amit, Wolf Financial, is Evan there as well.
I don't think Wolf should get the credit there. I think it should be you, but we're a good connection.
And I mentioned
Roy was in the trenches,
and he said, "Why don't I put my money where my mouth is? I bought more because of Crossroads. He gets half the blame now." And so after that, somebody had mentioned actually that Chris said, "If it's a cult, you're our Pope," and there I am. Pope Roy of BMNR. So
I like it.
It is official. And I'll show what Tevis did as well. He took it one step further as well, right there. And there you go.
I gotta say, Grok, imagine when Elon was posting it so much, it looked horrible. That didn't look bad.
Yeah, it wasn't that bad. And so yeah, BMNR, huge move today. I mean, it's a big move this week as well. Of course, I've sold some covered calls. Those are gone. I bought more shares to replace those. Selling cash secure puts. I have some shares. I have vertical spreads as well. A lot of my position there is a swing. But man, it was really undervalued. Now it's probably trading above MNAV. What caused the move? And what are you guys thinking after the move?
Kevin, go ahead.
I don't know what caused the move. So if we're taking question 1, I have no answer. I mean, Ethereum moved up.
Ethereum moved up. Yeah, there you go. Yeah, a lot of times Ethereum will go through these times where it's static. It sits, it consolidates, which is fine. It hit 5,000, fell immediately back. Hit 5,000, fell back as well. But I mean, there is so much going for BMNR and Ethereum in particular right now. You have more and more institutional adoption in terms of actual investment. I think people see that this is a scarce resource. It's not finite like Bitcoin, but they are burning through the gas fees as well. So it's not inflating at a rapid basis, less inflation than
That's
the
something
United
that
States.
I need to understand better, the inflation versus burning and exactly how that works in, because there's a yield that's coming off of it, which is also paid in ETH. So I definitely do have some questions there. But
I need to do more digging on that too. Yeah. Do we ever see Ethereum below 4K? Never
Yeah.
say never, but
we definitely, honestly, this is crypto.
Yeah.
I think to say it would be kind of crazy. But what I do think, though, we'll see where we end up going. What I do think, though, is for so long, I've been sitting here saying the crypto technology, there's something there that you can be used. Why is there a certain fee to cross to pay someone on a dotted line on the map that we created? That just doesn't make sense.
Yeah.
And now for the first time, there's actually a use case that's happening besides drugs and whatever. And I know it's a little bit more, but it hasn't ever been able to come to the mainstream. Wall Street has never been able to adopt it. Every single company in the world is paying X amount % on fees for transactions and everything like that. Let's say it's, I don't know, Visa's charging a lot of money on all of this stuff. I don't know, maybe it's 3 to 5%. I'd love to hear hard data on it before I just throw out random numbers. And crypto has this Ethereum technology has the ability to make every single company in the world 3 to 5% more profitable. Now, is that going to get all to the bottom line? Visa is going to go in and use it. There's a lot of ways that you can play this theme, but that crypto technology, the power of stable coins is coming, and it feels like one of those things that can see mass adoption within the next 3 to 5 years, which is the timeline that I think the market really comes in and speculates. So we should start to see the pickup there. I think that's important. There's also this tokenization theme and all of this other ones. But I think the point is the underlying tech of crypto is starting to be useful, and we're really actually getting to the point there. I can't for certain say it's going to be Ethereum. I think that's a valid question. Maybe the best way to play it is through the traditional financial rails, because they're going to get all the benefits. SoFi is going to be a winner from this. They're going to be able to they charge 0.5% fees, and because on the back end theirs is like 0.1, like they're going to be printing more money as they get bigger.
Yeah, I'm skeptical on that piece. I know that Anthony Noto has talked a lot about it, but there's a lot that's needed in payments. If it's not remittances, where it's like, hey, I'm sending this to my uncle, no problem. You do that. You don't need to know who the other consumer is. You don't need to have a refund process. You don't need to have a fraud process built in, which, the payment rails or the payment provider, payment processing, like PayPal would cover all of that if there was issues. If it's just directly in crypto, if it's not a remittance, there needs to be a little bit more as well. And so there are going to be, it's not going to be nearly as cheap as people expect. It'll take time to scale. SoFi doesn't have merchant relationships. I'm not counting them out. I don't want to price anything in from payments. That's just pure upside. If it happens, it happens. But there is disruption on that. That's one of the reasons why Visa, MasterCard, PayPal, even, Klarna with its IPO, payments is getting a little bit beat up right now because there's this narrative that stablecoin is displacing it. Now, the good thing is for us holding BMNR, there is a whole lot that's being built and used for stablecoin, a lot of use cases as well. That's ramping tremendously. Over half of all stablecoin on the planet is actually running on rails by Ethereum. And dev community is there. Somebody mentioned in the comments. It just, there's a lot of reasons, 100% uptime. Tom Lee made that point as well. And institutions prefer to invest in something like this, especially that it's a decentralized asset. So, Steve, there's this question in the audience. Do you own Ethereum as well, or just BMNR?
I own everything.
Okay, you do own everything.
I own Ethereum, I own BMNR, I own the Ether machine, and I own SBET.
All right, so we're going to
why
talk
do you
about...
own, why we own SBET and Ether machine?
So, all right, before I answer that, I'm going to answer your other question, because you had alluded to why Ethereum could be a deflationary asset. So the maximum annual issuance of ETH is capped at 1.51%. And on a net basis, it's been averaging 0.09%. It's nowhere near it. And right now you have PayPal, you have Shopify, and you have MasterCard that all built their stable coins on the Ethereum layer 2. I don't know about Visa, and I don't know about American Express. But The Genius Act opened up the doors for stablecoin adoption. Before the Genius Act, I was not on the crypto train. I was only XRP/Solana. I don't own Solana, but I think there's a lot of technology there because of cross-border payments and financial institution. After the Genius Act, I became a full ETH bull for several reasons. And if the stablecoin segment does what I think it's going to do, I think it's going to burn off more ETH than what the issuance is going to be, and the overall supply will actually become deflationary. So that's in a nutshell how that works. I own SBET and I own Ether Machine because I don't know between them and BMNR who is going to do better at staking, restaking, and restaking through DeFi. I'm not smart enough. I don't know who's going to win in that, so I own all three. I also bought Ether Machine on principle because their CEO and co-founder put up, I forget how much Ethereum, a couple $100 million of his own Ethereum, and he said Bitcoin has no utility, which I've been saying for a decade, so I'm in it. And SBET had a good valuation, and I actually like the premise behind it, so I want to own all three.
All right. Well, we'll talk about some of the other Ethereum treasuries here in just a second, and why perhaps some names like BMNR over others as well. But first, like kind of a simpler question, Evan. I'm assuming, like I asked before I get to the question, do you own both Ethereum and BMNR, or just BMNR?
Yeah.
Okay.
Yeah.
And I'm in the same boat. Initially, I had a lot more Ethereum than BMNR, and I'm like, hey, I'm consolidating almost all my swing positions into BMNR. Usually, I don't do that. I have a few IPO plays that I'm doing too, but that's most of it. So it's
if
actually
I had my
larger.
ETH in a place that wouldn't get me capital gains, I would have sold it already and bought BMNR.
Yeah. And that's, a lot of people, New Jersey, New York. I think there's a couple others too where you cannot
stake.
I can't stake either.
And people want to do that. So this is one of those things. But so going back, let me put up this here. Here is the chart itself. This is over the last month. You can see underperformance by BMNR. It's down about 9%. Overperformance by ETH, it's about 3.5%. On a weekly basis, of course, it's crushing Ethereum. Daily, it's too soon. But a lot of it is that Ethereum but BMNR went way up when Tom Lee was announced as a chairperson. If you look at pretty much any of these other treasuries, the moment they announce, big pop, and then it drops, and they kind of have to. Now, the reason why BMNR and not ETH is, I actually think both is good. I regard Ethereum essentially as like cash in my wallet that provides yield. I just plan to hold it. I don't plan to trade it. I can thankfully stake in Texas, great state of Texas, USA. But at the same time, BMNR is kind of like in taking, instead of that cash that's in the bank that's getting some yield, it's safe. It's a lot more volatile. I'm putting that and making it invest for me. Or in this case, I'm having some brilliant minds invest it. So basically with BMNR, what they're able to do, like MicroStrategy, is the goal is to increase shareholder value, of course. But how do they do that? By buying the underlying asset. In that case, Bitcoin. In this case, Ethereum. And they can do that effectively through a vehicle called dilution. Now, dilution is not something that usually we like as shareholders, but not all dilution is dilutive. And so what that means is, for BMNR, if you look at their assets that are under their custody, their MNAV in this case, they have of course, their cash balances. There is some WorldCoin, and maybe we'll talk about WorldCoin here in a moment with that massive investment they had. There's also Ethereum too. And so when the stock is actually trading as far as market cap over the MNAV, then that means that they're overvalued. And I actually think that that's a really good thing, because what Tom Lee has said and their basic strategy, and others have the same strategy too. I'm sure that there will be multiple winners, including maybe ETH, but they will dilute, and then they'll buy Ethereum. And that is actually non-diluted because they're taking very expensive stock and buying Ethereum there. They institutions pay like basically no premium over it. So that's actually increasing, not decreasing shareholder value. The goal of BMNR, of course, is to own 5% of the Ethereum network itself. And I actually think BMNR has an advantage over here. Usually for stocks, if you're looking at stocks and you're like, oh, these basically do the same thing. This one's way undervalued. This one's actually trading at a premium. you go for the undervalued if all things are equal. In this case, I think it makes sense to buy, maybe not buy, but at least believe more in the company that might continue to trade at an overvalued premium, because this allows them to sell their expensive stock, buy a lot more Ethereum at a more rapid pace than the other treasuries, eventually buying up some of their competitors, getting to that 5% yield in Ethereum. There's a lot of things that they can do with it, versus some of these Ethereum treasuries have already sold or have already deployed all their cash. They're trading way under their NAV. And as a result, if they dilute, they are actually being dilutive. And so they're just kind of dead in the water, waiting for for them to get a bid. And they absolutely will if Ethereum does what Tom Lee is talking about. But they're stuck and they cannot buy more Ethereum, or at least not very much more Ethereum, unless they want to dilute their shareholders. And so the ability, I think, of Tom Lee being in there, institutional understanding as well, comfort as well with something like a BMNR, and probably one or two other Ethereum treasuries. And like the biggest factor is Ethereum. So when we were at, I'll ask a question here in just a second, but when we were at the Robinhood conference, Evan, we ran into a lot of people that had no exposure to crypto at all. They're like, I've never been in crypto before, but, and then they would say, I bought BMNR, Tom Lee, Ethereum makes sense. I'm going to put my trust in him. So I think that is their advantage. Yeah. I think that is, to say, their moat. I'm not saying undervalued ones will always remain undervalued, that you shouldn't bet on those, but that's why BMNR versus Ethereum. And I think that over, like with MicroStrategy, if you look at Bitcoin, like people have done really well over the last few years with Bitcoin. If you look at MicroStrategy, because they have that vehicle dilution of a premium on the stock price, then they can buy more Bitcoin. The returns there have been much more intense than what you'd have for Bitcoin. So for you guys, why BMNR? I guess, Evan, for you, why BMNR instead of some of the other treasuries?
Yeah. So what I would say is, when I look across different markets, the winner, the market leader in this space, gets a premium consistently across the board. And the second place one maybe always looks undervalued. Maybe we're talking about, maybe the second one also gets a premium and the third one looks undervalued. And the way I want to invest is I'm going to buy the market leader at prices that are a little bit higher. And I think that winner deserves a premium. I think ultimately the difference here in this game is being able to get to scale, and what scale you can get to. I think that's more important than like what type of distribution you can end up getting. It doesn't mean like the other ones won't at some point grow faster, but I think that the game right now is getting to scale, and kind of what you were saying there, Tom Lee's name is able to get them to scale quicker at this point in time. And if this story really takes off, Tom Lee's going to own more Ethereum at 25K versus all these other ones who are now have a great business. They're doing a great job. They're getting good distributions. Maybe they have incrementally better distributions because they're going into it. But I think the total return on that will be less than the person who can get to the largest scale. I don't know this Ethereum treasury business and Bitcoin treasury business can be that deep. I really feel like it might be a one or two winner in each area. You got the Sailor, one or two others. You got the BMNR. SBET will probably work out, honestly. And then there's probably going to be all these other smaller ones that go along, but I just don't know how deep they're going to be in each space, So, yeah.
There tends to be consolidation, especially because institutions will usually consolidate around a couple of names too. So, yeah, maybe SBET, maybe ETHZilla looks pretty good. Those are trading under their MNAV right now, but they may, well, I don't know about today. They may have moved and shifted today.
The share count is always difficult to know as well. And there's these pipe unlocks. Yeah. These things are more complicated to understand than people really do give them credit for.
Yeah, they are. The other thing I do like about BMNR a lot is their level of communication, like both on X, on their actual website as well. Tom Lee, of course, does monthly videos where he discusses and talks about it. I like that as a shareholder. I prefer that. Even if you have two great companies and one communicates a lot to you and gives you a lot of information, the other one's more of a black box, give me the one with the information every single time. So, Steve, what do you think? Do you think that this consolidates in a couple of names? And is this for you spreading out wide, just saying, you know what, some of these are going to win big, others maybe a little bit less, but I'm just going to diversify? Or what's the general strategy there?
I think BMNR is going to be the gold standard in the treasuries. I do think there'll be multiple winners, but some are going to win more than others. And it goes back to what is the price target for Ethereum? If you believe Ethereum is going to 25,000 over the next year or two, and if you end up being correct, then issuing shares at these levels to buy more Ethereum is not dilutive, because the share price will appreciate so much because of how much Ethereum goes up that the dilution will not matter. So there are multiple variables, but because they're able to issue equity without taking on debt and buy Ethereum and stake it where the yield becomes immediately accretive to the bottom line, it's immediate net income that can just be rolled into more Ethereum and can have a compounding interest in the company. So I think when you look at who can scale the most, that's going to be the one that wins the most, and that's BMNR. I just happen to like the other ones too. So I have a small position in those also. It's kind of consolation prizes, but I think BMNR is a clear winner.
Yeah, and I'm curious, there's some questions on like what do they do when they hit the 5%, because that is their goal. There is some talk on that, but I'd love for hopefully Tom Lee the next month, which is actually coming up sooner than you might think. He'll come out with the newsletter. They'll talk about
No,
it.
forget the newsletter. They're a publicly traded company. They
Well,
have
yeah.
to have an earnings conference.
Yeah. Oh, yeah. That's
So that's going to be where you want to really dig into the top ones, because they're going to have to talk about how they're staking, how they're restaking, and how they're restaking through DeFi. To me, that's the big thing besides the dilutive factor.
Now, this is a question here. So this is because the NASDAQ itself has basically said, if you want to raise in terms of getting some Bitcoin, Ethereum, or what have you on your balance sheet, you need to ask shareholder permission first. For SBET, there was a drop down actually in BMNR as well, even though it didn't affect them. But for companies that are treasuries, so MicroStrategy, SBET, ETHZilla, BMNR as well, shareholders know that this is the model. And so they're going to prove this is not a problem. They can have approval once for a certain amount and then just continue to do that. So it's not an issue. What it is an issue is there's 70, 74, 77 companies that have acquired or are looking to acquire on NASDAQ some of these, not stable coins, but Bitcoin, Ethereum, and so forth. And so they're seeing a growing trend without shareholder approval. And I think it's good for the NASDAQ to step in. For BMNR, they are kind of with the New York Stock Exchange. It's Amex Exchange, so it's not the direct one. They don't have to require shareholder approval. At some point, if they do change and switch, they may need to do that. But it's not an issue for these. Now, on this, let's pull this up real quick. Now, if you guys are new in BMNR, make sure you check out what Tom Lee has to say on it as well. But they have this great. Let me see if I can shift. There we go. That'll be okay, and I'll blow this up. They have a great investor relations page. It's really easy to use, very clear on the vision as well. And this is under the digital asset treasury fundamentals. They have the 5 ways to increase ETH per share. Basically, why bet on them instead of Ethereum? And all of these can conceivably do this. I think that just BMR is going to do it well because of that advantage on dilution, name recognition, and so forth. So issue a stock at a premium to the dollar value ETH held per share. Don't be surprised, by the way, if we see BMNR go up like 15% on Monday and Tuesday, and Ethereum goes up like 2 or 3%, they probably will capital raise, and they should capital raise at that point, and then use that to buy more Ethereum. Which again, it's a I can't think of the term. Glorious cycle. That's not it. There's the first word I'm missing. But issue equity-linked securities to monetize the volatility embedded income from operations. So, this is mostly like the staking. They're looking for a way to gain more yield than just a traditional stake, and that's it. There's ways to do that. A couple of the other treasuries, including SBET, have done that at a much higher yield than you would expect otherwise. There's staking as well. And then acquired DAT trading at close to NAV of ETH held. So this is talking with Evan's point, when some of these others treasuries that are just dead in the water, they can't dilute, or it'll be diluted because they're so under NAV, when they say, okay, we're dead in the water, but our Ethereum has a premium. If they're trading at, and some of these are trading at like 10, 15% of their NAV, if that continues and they're just not getting a bid, at that point, they're like, okay, the Ethereum is worth way more than our company. We tried this for whatever reason, it's not working. Then what's going to happen, or what could happen, is not just BMNR, but others as well, will just buy up the Ethereum there, and they'll either pivot to a different business or do something different, which that's really good for shareholders of that other company, also good for BMNR too. So yes, Duck, to your question of will they ever acquire other ETH treasuries? Nothing's guaranteed, but it is part of their plan as well. All right. So one other piece of BMNR news that we saw fairly recently was a bit of a surprise. So WorldCoin, which is a Sam Altman project, it's one where, if you haven't heard of it, basically they have these scan machines where you scan your eyeballs, not allowed in the United States, but it's elsewhere. I'll call it a bribe. They bribed people. They're like, hey, we'll give you a certain amount of cash, and I think WorldCoin itself as well, if you let us do this. So they have their own cryptocurrency. Tom Lee comes out after Dan Ives is announced as the chairperson of WorldCoin and says, okay, we are going to invest and have a stake in this as well. Octo is what it was trading on under at the time. Of course, it popped up massively because anything with Tom Lee's name in it, it does quite well. So what are you guys' thoughts on BMNR investing in that? Do you think that's awesome, worrisome, mixed bag? What was your reaction?
I've gone first too many times, Steve.
All right, Steve.
No, go ahead.
Go, Steve.
I can go. All right. I had full transparency. I have not put in the research into this one to be like, this is the winner on anything like that. I mean, what I will say, sorry, I was talking away from the mic. What I will say is the problem of identification online, bot farms, and even the bots on X and all that thing, that is a real problem. That is a real problem that probably could be solved by crypto. I don't know if this is the winner of it. I don't know if I trust like giving my biometric data to someone but I guess everything else is online. I just don't know. I enjoy Dan Ives. It's been right to be a bull.
Yeah.
Listen, we're in a bull market. This is probably going to make BMNR money. Is it going to make them money in the long term? No, they're probably going to sell out of the pipe and take back that $20 million, take $40 million back, throw it into ETH. And I'm a happy shareholder at creative value. So I think this will create value. I have no idea if this will create long-term value for the Orbs thing. I haven't put in the research, but there is some sort of problem there that, could be used in the solution.
Definitely. What do you think, Steve?
I looked into it briefly today when two people sent it to me.
Mm-hmm.
I don't know.
Yeah. Like if this is,
I don't think it matters. It's not something that I'm making an investment case on. I don't think it matters.
Yeah, the only reason why I know WorldCoin fairly well is because last year they were talking about partnering with PayPal and a couple other businesses, and PayPal's like, no. It gives me bad vibes, essentially, of like, okay, I'm going to give my biometric data to Sam Altman and use that. But, to your point, Evan, that is a real problem in payments and crypto right now. And that is a possible solution. I don't know if it's the solution or not. Of course, BMNR made a lot of money. The stock that they did invest in fell down. They're not looking to sell it or anything like that. But if they do that like on a reoccurring basis and they're like shifting more and more assets into WorldCoin, I'm frankly not going to like that too much as a shareholder. So we'll have to see what happens. Thank you, by the way, Mopar, for this donation. End of the week price for BMNR next week. I won't give you an exact price, but I'll say this. I think that we probably end lower. And the reason why is, A, we're in September, and crypto seasonality is usually not kind to crypto, although it's been the exception this week. But I just have a hunch it might be lower. And the other is, even if it goes higher, BMNR, I think, might do what it did today. Then they did loot, because this is, again, the business model. And so BMNR might go lower as well. So I wouldn't say right puts or anything like that. But for me, that's an opportunity to right puts instead of buy puts, rather, and swing that back and forth. So, all right. Let's, I think, pivot on from.
I don't want to give an opinion on this because I just have no idea. That Tucker Carlson interview was wild. I don't know if you guys watched that. That was crazy.
I saw clips.
I just watched that
won't-
one clip. I don't sit down and watch Tucker Carlson.
I saw this clip in particular where it was almost not quite a direct accusation by Tucker Carlson of saying, "Hey, Sam, you killed somebody," but he came close to saying that, which is really wild and crazy. I think Sam Altman might be I think he is a creative genius. Twice, basically all the personnel at OpenAI have left for a variety of reasons. Ilya initially, and then more recently, Mark Zuckerberg basically poaching a lot of talent. So obviously he's very, very good at what he does. I don't know. It's a little bit odd. If OpenAI was a publicly traded company, I don't think I would invest in them. They've done a lot of great things, but I don't know.
In fairness, you won't invest in Meta platforms either.
True. Yes.
So I mean, I'm not
Meta.
Yeah.
I may be stupid saying this. I think Meta's a 10x, and I'm not saying like 50 years or something.
I thought you were going to say something else.
But give me like a 10-year time frame. Meta, honestly, I'm worried. I'm an Apple shareholder. To me, Apple has the smartphone, and actually Tanner brought a really great point of connectivity through these smart glasses to your phone. Meta is going to be a winner in the next platform. Mark Zuckerberg is the CEO to invest in, and
100%. And I'll say it. I've said it before. This is nothing new for me, but Zuckerberg is in a war. He is hell-bent on screwing over Alphabet and Apple. He hates paying both of them a vig at the Apple store. He is going to own the next generation of wearables through AI, and he is going to own a vertically integrated company. And I agree, Meta is a 5 to 10x in my opinion, still from here. Now, if that takes 10 or 15 years, a different story. It's not going to happen in the next year or two.
Yeah.
But it's going much higher over time.
I don't think so. I think it's not fair to say like that, and it's like over 50 years. Like I genuinely think that 10-year time frame at the scale of where Meta is at, like a 1.5 trillion. I think we're talking about a $15 trillion company in 10 years, 10 to 15. I think that's where we're going. Are you into ETFs at all, Steve?
I have a bunch of them.
Can I ask you one that I have added a little bit myself? It kind of goes in that big stock getting bigger theme. Have you ever looked into the Qtop ETF?
Qtop? No.
Yeah. It's kind of like QQQ, but more concentrated down to just the top 30 largest NASDAQ 100 names.
That's interesting.
It's one that I've been kind of adding to a little bit myself.
What was the ticker of it?
QTOP.
68%. Jesus.
Okay, let's pull.
I think there's a slightly better way to do this, but the concept is something I still think it will outperform.
Yeah, I mean
there's also a top T as well, which is kind of similar for the S&P 500, but 20 names.
Yeah. No, I remember you telling me about this one now. I didn't remember the ticker, but yeah. I mean,
This
that's
one I bought. I would like to hear people tell me why it's a dumb idea so I could buy something better.
I mean, there's one that I like. It's not nearly as aggressive as that. I like SPYG because it's more focused on the growth companies in the S&P 500. And I like QQQ. I'll look at these other ones, but I think the big companies are just going to get bigger. Here's the thing. Nobody can compete with them. I'll just say it. They are the size of small countries. Nobody is competing with Alphabet. I've been saying it. Nobody listens. I continue to say it. Search isn't dying. Their CapEx spend keeps going up. Their cash from operations generated keeps going up. And when you look at Alphabet, Meta, Amazon, and Microsoft, nobody can spend the way that these companies are spending. If you can't spend the way that they spend, you're not going to be able to build the models. You're not going to be able to build the infrastructure. You're not going to be able to build the products. And they control the market. They're not getting broken up, and they're just going to get bigger. None of these companies can compete with them. So I don't mind a concentrated thing into those companies. I think Tesla is the outlier in the bunch that I think too many things have to go right, but I think it's got a huge risk reward payoff ahead of it. But I'm all for the spectacular sixes, I call them right now.
Oh no, just put Broadcom in there. Keep the Mag 7.
Broadcom's amazing. I mean, Broadcom, we could even go Elite 8. I mean, Amit was saying that today, that we should add Broadcom and say the Elite 8. I'm fine with that because Broadcom's an incredible company.
It deserves it, honestly. Frankly, maybe we're right now more than Tesla, although Tesla, I think long term, they're doing some very interesting things too. But yeah, as far as Meta, like my thing is, I really don't like what they're doing on the social media side. I think Zuck is an amazing CEO. I think they're a very strong company. What the talent that they've acquired, the directions that Zuck wants to go, I envision basically him. If you've seen Ready Player One, basically launching the metaverse at some point, like the real metaverse where people it's very immersive. That's going to grab a lot of people. There'll be some good ramifications. There'll be some negative ramifications as well for society. I think it might be more negative than good, especially if it's Meta's vision. But they're the company that will pull it off. And I don't think it's an if. I think it's a when. That's going to be massively accretive for shareholders. I just don't think I like that. So I prefer to invest in companies that there's just a few really where I'm like, I don't know about. I don't feel comfortable investing in what they do, even if I think that they'll do well. And there's enough great companies out there that I can go elsewhere and just ignore this, except in a stock draft when we were just paper trading it. I picked Meta like third round just because I think it's really solid as well. Now, as far as your question, Evan, with this index, like the Qtop, it makes a lot of sense to me. I think this is going to outperform on a fairly consistent basis, just because we're in the age of AI. Hyperscalers benefit immensely. Let me put this up against. This is compared to the NASDAQ. Is that right? The top 30, or was it?
Yeah.
I'm gonna look more into it.
So yeah,
I like the theme.
There's a slight outperformance year to date over 3 months. Slight outperformance over a year. Slight outperformance as well. I think that'll be pretty consistent. The one thing about this is there's a lot less diversification. If somebody is investing in the NASDAQ or the SPY or some level of diversification and they're super concentrated elsewhere, this may not be as appealing. But otherwise, like if you're just looking for outperformance, I think, yeah, that's a good pitch there, Evan. And you still have a lot of diversification. I mean, like that's not just investing in like one or two companies. So
can I share something?
Yeah.
Roy, I want to show you something that I built into my NVIDIA article. So there's a few things on this. Let me make this a little bigger.
Yeah, zoom in.
And I will comment anybody who leaves a message on this. So I'm going balls to the wall on NVIDIA because I've never seen a company do this before. The amount of growth is incredible. I don't think it's stopping. And when I look at where the analyst community, I reran these numbers yesterday, has these companies, should I go one bigger, Roy, or not? Can you say
probably one bigger, yeah.
All right. So as of yesterday, NVIDIA is expected to earn $4.49 this year, and that's up from the projection at the beginning of the year. And $7.51 in 2027. 67% growth over the next 2 years, and they're trading at less than 24 times 2027 earnings. You can't find that type of growth at that price per earnings anywhere. It's really incredible. And then you got Costco that Mr. Sir Joseph Carlson thinks deserves a higher premium, which I just don't see. I don't get it. I must be dumb. But
we won't revisit Costco. So we know
the fact that you have old world companies like that are trading at higher premiums than the big tech companies. Costco does not even $8 billion in net income a year. It's got less than 3% profit margin, and it's getting a stupid valuation. I actually think big tech is undervalued. And here's the big thing: CapEx spend. Look at this CapEx spend. I have the data points in the article, but when you go Q1 to Q2 in 2024, I think the year-over-year increase was something like 16%, and in Q1 versus Q2 2025, it was 22% quarter over quarter increase. The rate at which they are spending is now actually increasing. And Jensen is expecting these 4 companies alone to spend $600 billion in 2027 on CapEx. That's not even including Oracle or anyone else. And where's all that money going? A large portion of it is going to NVIDIA. And they're not just chips, they're models, they're networking, they're software, and they're going to be building out so many things on the sovereign AI, and they have a roadmap that goes out multiple years. And here's the biggest part. All these companies are in a prisoner's dilemma. None of them can stop spending unless they all stop spending. So if one company decides to take their foot off the gas and they don't upgrade to Rubin while the others do, they fall behind and they're no longer relevant in it. So none of them can take their foot off the gas. So I am just, NVIDIA to me is the play, but I think the other ones are going to do really well also. I also think that Alphabet is still undervalued, and their fair value is more like 290 probably, because I think they should be at the same price to earnings as Apple forward. But I can't say enough good things about NVIDIA right now. It's just, the more I look into this company, it's incredible.
Yeah, likewise. And we'll, by the way, guys, data-driven investing will be joining here in the next few minutes. We'll pivot towards some fintech, including Robinhood. We'll talk about the summit that they had. SOFI, there's a fun little rivalry between Robinhood and SOFI. I do want to ask you guys, Evan, you are a bit of an Apple fanboy. What did you think of the Apple Day?
I'm an introverted person, and I went to like 10 events, met so many different people. Like, honestly, I was in the side of the room for a lot of it. I didn't get the chance to watch it. This was a very draining week.
Sure.
I don't like. I looked into the air a little bit. I don't fully get it. They seem to have a pricing problem with first generations of products. But at the end of the day, this form factor of the phone is clearly theirs. And my question is when does the Zuckerberg stuff come in? Apple versus them, like how can they go down that pathway? And I feel like we're just in a world of incremental changes with phones. Apple's going to do a flip phone in a couple years. I guess that's the cool thing. Apple will hopefully make it cool. AI is a really big thing, and Apple is going to, I believe Apple will be able to be people's pathway into actually getting use out of AI. They're not going to have the best model. They're going to partner with people. But the device where most people have their first big aha moment with AI will be through an Apple ecosystem. And there's value in that. So I get why growth investors don't want to own it, though. Like it's clearly not a growth stock.
So you may not know this. This was a few months ago, but Steve and I made a gentleman's bet. I believe it was 5 years.
I don't even remember what that was. You're going to have to remind me.
So in essence, I'm pretty bearish on Apple. I don't think Apple's done. They're not going bankrupt, but I think it'll be a slow decline. I'm seeing them like the Ottoman Empire of the 16 and 1700s, massive, but clearly they peaked. Clearly they're in decline, and they're very vulnerable as well.
The Ottoman Empire didn't have $100 billion of free cash flow.
Yeah, that's. I mean, they had more. Like if you look at them, they were massive. Undisputed masters of the Mediterranean for a long time. Chris has joined us, by the way. When you get your camera up, I'll actually re-add you, Chris.
What was the bet, Roy? Because I really don't remember.
So I bet that the S&P 500 itself will outperform Apple, which is challenging because Apple is a large part of it. You bet that Apple would outperform the S&P 500 over a 5-year.
Bad bet from Roy. Bad bet from Roy.
You think so? Okay.
Oh yeah. No? If you're gonna tell me if Apple is gonna probably be the worst performing Mag 7, maybe ahead of Tesla. That's a different bet. Beating SPY easily.
We'll see. I mean, the buyback helps them. It makes it possible. I think it'll be fairly close, but I don't know.
I bet you it goes between SPY and QQQ. It does not outperform QQQ, but
that was my thinking. Also, I think that Apple is going to outperform SPY. I don't know that it outperforms QQQ, but Apple's starting to scare me, and it's starting to annoy me. Hey, Chris, how's it going?
Hey guys.
And the problem that I have with Apple now is they're so far behind that you have somebody like me that I switched over from an Android when they were on their Galaxy 4, I guess. I mean, this is more than 14 or 15 years ago. I got my first iPhone at this point. And I'll tell you, I would consider switching back to an Android as much as I hate the Android platform. If their AI assistant is vastly superior in a year or two, that makes my life easier. And I think to
It's
me,
already vastly superior.
yeah, but it's not vastly superior enough for that's going to improve my life today. But when it gets
That's
to the
fair.
point where I can say to my phone, I need to fly to LAX. I want to spend this much. I need to leave here. I need to stay here. Just do everything for me. And it knows my preferences and it can do it for me. That's enough to get me to switch. If the personal assistant can actually make my life easier.
All right. Well, there we have it. We'll have to see. Chris, before we pivot into fintech, any thoughts? And by the way, Chris, do you know stock market news, Evan?
So
And then-
I follow him and I respect his opinions. I don't
All
think
right,
we've ever
so,
been on anything together
looks like
before.
he's
Yeah, it's
frozen
nice
a
to meet you,
little bit.
sir. My opinions
good
are
to meet you.
fine. I put faith in my news, but the opinions are okay. So they're okay to not agree with. It's nice to meet you.
Well, one of the nicest guys out there. You both are. So, any thoughts on Apple, Chris, from you before we pivot to fintech?
I'm not. I'm with you. I don't think that they outperform SPY.
Yes.
And I think the reason why, and this is my opinion, and I wouldn't like. I don't feel strongly one way or the other about Apple because I'm not in the ecosystem, right? I've got family members who are, and I understand that like when you're in that ecosystem, it's really, really hard to break out. And so they've got a really good moat in that way. I don't think they're going to be shrinking, but I just don't think their revenue and earnings growth, even with the buybacks, because they're earning their PE is so high, and because those buybacks are only buying back 2 to 3% of the shares, and then they're only growing their revenue by single digits. I just don't think that's enough to outperform SPY at this point, unless they get some real innovation going, which they haven't shown the ability to do. And especially with the AI, I understand that there will be people who will have their very first real experience with AI once Apple gets there. But the Pixel, so I've used Pixel. I'm actually on a Samsung now because my work no longer supports Pixel phones. But I've been a Pixel user for quite a while. And like the Pixel 10, so I read lots of news and like reviews and stuff. The Pixel 10 has gotten better reviews than any other phone that I've ever seen. Like the reviews for it from actual, from the people who do these types of things have been nothing but really positive. And so I do think, and in the last year, the Pixel was actually the only device to gain in market share. Because people were lengthening their upgrade cycles for the most part. So Samsung and Apple went down in terms of market share, in terms of like year over year market chart. Pixel was really, really improving, and their hardware. So back when it was the Pixel, like the Pixel 2 was okay. Starting with the Pixel 6, there has been a lot of improvement. Like I had the 6, my wife had the 7, I got the 8, she got the 9. Neither of us has the 10, but the marrying of the hardware and the software, which is what you get with the Apple ecosystem, is getting really, really good with Pixel because they're getting much better at the hardware side. And then I think, again, just the little things between the Samsung that I have now. So I've got the Galaxy S25 Ultra, right? Like their top of the line device. It doesn't run as well as my Pixel 8 Pro did. There's just lots of little quality of life things that the Samsung just doesn't get. Like I don't like it as much as I did my Pixel. And so anyway, so I really think that Google has an opportunity there to really take market share. Now they've got, it's going to be a big battle, and there's tons of people who are always going to stay with Apple, even if they are far behind in the AI race. But I think the issue with Apple is they've got a huge moat, I don't think that moat's getting wider. I think it's shrinking. And that's what I would be concerned about.
Well, Chris, I'll say that I agree with you on their inability to innovate, and it's a huge problem. And for the first time since 2018, writing on Seeking Alpha, I actually downgraded my investment case to neutral from bullish because of their inability to innovate. And for somebody like me, I'm still with the Apple ecosystem because of how familiar I am with it. I believe that this is just a standard for a lot of people. It's just so easy when you use just Outlook for so long. You're just so used to just how you move files around. It's hard to make the switch, and I think you need to have a catalyst for it. And I think AI could be the catalyst in the next year or two for me to actually. I'll never give up my iPad. I will forever have my iPad. I'm never using. I have one from Android because I need to learn how to use it. It's horrible. Can't stand it. But I would switch my phone if the AI system makes my life easier.
Yeah, and that's really the question in my mind is like, what will cause those that have been embedded in the Apple ecosystem to actually make the switch? And that's a hard question. We had some discussion on this in Vegas at the Robinhood Summit. Of course, Amit is a diehard Apple guy. He's on the other side of the argument with Steve, with Evan. And I'm not an Apple guy, so I don't know.
Why did you guys stay in an Airbnb?
It was a nice Airbnb. I'm not going to let you stay on this. It was an enjoyable time. It was a cool day.
Caesars, or stay at the Bellagio. You have craps. You got the restaurants. You got room service.
We're not gonna pay for the room service. We're just gonna go get the free food. Come on.
The real reason though is we wanted to force Tanner out of his comfort zone and force him to share a bathroom with somebody for his own good. That's it. No, not. There's a few other reasons too, but no, it was what made sense to us at the time. Should we have an opportunity in the future, we might do it differently next time. But
where was the conference?
The Virgin Hotel.
Which hotel?
Virgin. It's like a new one. I don't know. It was kind of dead, honestly, but
yeah,
it might have just been because Robinhood booked it all out, so it was just a bunch of nerds, fellow nerds, and I don't know how much they gamble. By the way, on the Apple thing, here's what I would say on what's going to disrupt Apple. It's not going to be Google. I think there's no okay, let me rephrase that. It's not going to be another smartphone company. It's going to be Mark Zuckerberg. It's going to be the new form factor that comes in 5 to 10 years. That is scary. Apple is at least in the right direction with the Vision Pro. So they have time, but there is a new form factor coming.
It's got to be glasses. It can't be goggles.
Yeah.
It's got to be wearable glasses like the Oakleys or the Ray-Bans, slimmer down, and it's got to be able to do so much. I mean, and I put this in an article a year or two ago, maybe a year ago, that one of those sets of glasses could be such a huge tool with a earbud. If you just meet somebody, you go into them, even if it's regular glasses like I'm wearing, and it can scan somebody in the room and bring up their LinkedIn, show me everything I need to know about them that I never met them before. I mean, just like it did in the Terminator movie where it scans the person, gives you everything about them. I think that's coming in the next year or two. I really do. I mean, how hard is it to do facial recognition and then get their social media and give you a data dump of everything you need to know about them?
Yeah, that could be the case. All right, let's pivot. Let's talk about the Robinhood Summit. Evan, you and I were there. Chris, you're a happy shareholder of Robinhood. Steve, I guess real quick, did you see any of the headlines? Anything pop out to you from the Robinhood Summit?
I really don't pay attention to any of that stuff. All I know is that they shorted SOFI.
Yes, we're going to talk about that. So before we talk about that piece, and we will absolutely talk about that piece because that is, I think it's cool. Chris, overall in the summit, you were a viewer. I'm sure you saw at least some of the stuff. Anything stand out to you, Robinhood specifically, or what you saw from the summit?
So I only watched clips. Like I didn't get the chance to watch the entire thing this week. I do think like their active traders, right, are what make up the bulk of their revenue. They're continuing to push out things that are going to keep those people engaged. That those power users call them, the active traders are really going to use. I mean, I think it's only going to be good. Like all the things that they're doing make sense. There was nothing in previous events, they've always had kind of a wow factor. There was nothing that really was overwhelmingly like a wow factor type thing, in my opinion, in this one. Maybe I missed something, right? You could tell me I'm wrong on that. But I do think like just overall, the ecosystem is going to get stickier with all these new things. They've got that the AI stuff is interesting. I'm not sure how much people will use it. Like I know that I probably wouldn't use any of those types of like indicators and technical indicators, but I'm not a TA guy anyway. So but other people might. I'm not, and I made a post about this. The social aspect, I'm just skeptical generally that those types of things, because pretty much every other company has tried to do that. None of it has really taken off, because I think there's kind of two main reasons for that. Number one is that lots of people don't want to actually share their trades. And then the second thing is just that they don't really have, I mean, there's 20 million-ish accounts, right? That's not the type of distribution you need where you can get the type of network effects that you get with a Meta or with an X or with a real social media. So I'll be skeptical. I mean, I'd be happy to be proven wrong about that. I don't see it really taking off, and maybe I'll be wrong. But I just think Robinhood will do exactly what they're going to do, which is iterate quick, bring the new features that people are looking for. They'll do those quick, they'll do them polished, they'll do a great job, and then they'll get them out and iterate on them as quick as possible. I do think Robinhood at these is expensive right now, right? Just because, I mean, any stock that's trading around a 30, a price this sales of 30 is going to be expensive, regardless of where you're at. But I think eventually they'll easily grow into that and continue to grow from here. And then the S&P 500 inclusion is obviously also a huge, massive, fill up in their cap. Huge congratulations to them. And then it also, like, it's a tailwind, absolutely, that it's included in that index, and now it's going to be a greater part of the mind share of the market in general, even than it was prior.
Yeah. So I'll say it, and then Evan, I want to get your thoughts here. I'll say that at the prior events, basically what they did is show off that their mode is speed. They can ship things faster and better than anybody else. And that is a real mode, because, others can copy, but unless they just are sitting still, then, I mean, how are they going to ever catch up? Doesn't mean that they'll never stumble. Doesn't mean that everything they launch is going to be perfect or even work. Robinhood Social, I have some questions on that. I do think that there's a way that it works, and I'll talk more about that with Amit and Tanner on Monday night for our Tech Bros Weekly. Used to be Robinhood Weekly. But I think it'll be on the prediction market side where that really, really has something interesting there. And so more of what I saw this time rather than TAM Unlock is they basically strengthened their flywheel. They strengthened their core products as well. And it's all about active traders, which again drives a lot of the revenue for Robinhood. I don't know, it's not cheap, but I wouldn't say it's expensive necessarily here. But yeah, it's certainly not cheap. Evan, what were some of the things that stuck out to you for Robinhood Summit? Anything that you really brought home?
So, first of all, taking a step back outside of the live stream, the event itself, the energy in the room was amazing. They did just get it added to the S&P 500. That could be the reason for that. But wow, the energy at that event and everything going there was just really great. And first, when we were talking about how much this event cost, I think the energy it creates, these events, you're going to see SoFi doing this in a couple years. You're going to see PayPal doing it. You're going to see all these doing it because it is a great thing. The event itself, like, I was listening to everything they're announcing. It sounds so amazing. Now it's a new thing. Crowd goes wild. So you kind of get hyped up in the moment. And I thought back to everything they added. Like, I actually already made a separate account. I switched my ETFs and my single individual stocks into two different areas. But it's a lot of like incremental stuff. But as you were saying, it's the pace of innovation. They added Cortex, their AI features last year, whenever that was, earlier this year. I don't remember. And they just kind of announced it with, hey, here's AI, blah, 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 something might come. And then this one, it felt like, okay, a year, like a couple, 6 months later, they're actually making these features more useful and adding stuff. That pace of innovation is kind of the core theme here. They announced an AI event in December. I will say the social aspect of it, I do not know what their plans are, what their true money-making intention is if this is a thing to keep people on the app longer, and it's not necessarily to make money from. If they do want to make money from it, I do not know what is compliant and what isn't. Like what I've learned more the closer we get to Robinhood is there is compliance about everything and anything. There is, if you have data about people's portfolios, the advertising business that you can run off of that with 20 to 30 million users is $1 billion per year business. If you can do that in a compliant way. Historically, the stock market has been X amount institutional investors and very little amount retail investors. And there's all these numbers saying it's 30%. The ETF landscape is something similar. All of the traditional marketing rails go towards RIAs, financial advisors. These people have no idea how to advertise to retail investors. There's a huge gap in the market. Right now, they're spending 90% towards advisors, but there's 30% is retail. They're shifting their payment aggressively. Transparently, I'm going in this way. I see an opportunity there. But it's at Robinhood's scale, with the data that they have and the marketing that they could do on this platform, if it's in a compliant way, they could be taking down a lot of money. There's also a very large investor relations play. Earnings calls are hosted on websites. That makes no sense. They should be in a consolidated area where 23 million retail investors are being played in. And companies will pay a lot of money if you can give them the distribution for those calls. There is a really large potential here. The trouble is I just don't know what they can do, what they want to do, what their goals are. So I can't necessarily price it in yet, but I think there's going to be something there. It's just how compliance possible it is, and we'll see.
Yeah, that's a good argument.
Yeah. And I don't know that they're doing this for advertisement. Like, the thing about Robinhood is, like, not everything's going to work that they do, but they do a lot of stuff. And this is not just throwing spaghetti at the wall. Like you see, for instance, with the social side, a couple of things that they launch at the same time would just make absolute sense. So one is multiple accounts. Why is that relevant to the social? Well, for myself, I have taken pains to not show how much is an account. It's not because I'm a mega well. It's just, I have some real life people that follow me, and that can make things awkward. And so I would rather not. I don't mind showing like percentage and everything. So if I was going to use social, I might like do an account, put it like $10,000 and say, hey, $10,000 challenge. Let's see where it goes in the next 5 years, whatever. And then make that part public and show those trades and stuff. So they needed to do that as well. And there was one other piece that flew to my mind. I'm really tired, guys. Sorry. One of the other products that they launched, I was like, this makes perfect sense with the social aspect too. Plus what they're doing in the prediction market. I think like sports betting, people love to brag about sports and their affiliation. I think that the social side will actually get the most traction from the predictions market itself, which is something that, it's going incredibly well right now with all the, professional football, college football, and many other events as well hitting and happening. We've talked about whether it should be a separate app or not. That's a different discussion, but that's going really well. Hopefully that fly will eventually translate to some of the people that are just doing predictions markets to like saying, hey, maybe I need to invest in the S&P 500, Robinhood strategies or something like that. So they're strengthening their products. They're building a strong flywheel. And the thing that I love the best out of the entire summit though was, we asked them. We asked a bunch of employees from like C-suite guys to lower level guys. It's like, hey, S&P 500, congratulations! Like, tell us about that. And literally, it was take 15 seconds for this moment. Okay, awesome. Now back to work. And Vlad was out there tweeting. And he's like, great, we're just getting started. The job's not done. That was not the goal. Like they're like, hey, this is exciting. This is amazing acknowledgement. But that they're not like even like, hey, let's take the week off. Let's take a day off. Like they're so focused on the mission of democratizing finance and building what that platform is. And they have that plan out there with all these different things. And it's dynamic, but of what they're shipping, what they're building, where they're building as well, because they're launching international. And so like the speed of innovation, the execution as well. Some things won't work. Some things that they've launched now might not make sense right now, but may when we see what they launch, like at the AI Day and at different events as well, in the next 6, 9, 12 months. So yeah, overall, a great event, amazing company. SoFi though, so they announced.
Real quick before we pivot away from Hood. So one of the things that, like, I guess the one thing as a shareholder that gives me a little bit of pause is their funded accounts haven't really grown nearly as much as their assets under management. And so what they've been, it seems like if you look at the data, they are taking tremendous wallet share of the people that they already have. I do get a lot of marketing material from Hood. Like, I see their ads everywhere on YouTube, on like all of my feeds and everything. And I wonder, I guess, if they're spending that much on marketing, I know that it's obviously working for having people bring their assets over. I'm not sure if it's working for, like, I think that they could scale users. I don't know why more users aren't coming and why their funded accounts aren't growing more.
So at least,
yeah, go ahead.
yeah, if you're referring to the prior quarter, that this was the first time, I think they had maybe 6 weeks, 6 to 8 weeks where they didn't have any transfer incentives at all. I think they wanted to establish a baseline to see what that was like, and it wasn't that pretty. Before they're ACAP positive against every other brokerage. So
no, I'm not worried about that. I'm saying, like, bringing new people in, new users.
Yeah, no, like a lot of the ACAP transfers are brand new users. That's where a lot of the growth is. But are you saying like brand new investors that have never invested before, or something else?
No, just that their total funded accounts numbers, I would have expected them to be growing significantly faster than they are. Like, month over month, they were actually completely flat.
Yeah. Let me pull up the monthly metrics. I know that
They did have a pretty big jump. I can't remember. I looked at the metrics earlier this week, right, when they came out. They had one pretty big jump, but generally speaking, like, their funded accounts aren't growing as much as I would expect. Like, that's just the one kind of, I'll call it a small yellow flag that, like, when I look through the numbers, I'm always curious about. I'm not concerned, but it does raise questions to me.
Yeah, here. Oop, I gotta share it actually. Add the stage. Yeah, this is August numbers. Funded customers, you're right. Like, it's actually flat. So it's something to keep an eye on. August wasn't like the best month in the market, but ideally you don't want to see things stay flat. So yeah, something to keep an eye on. There's always things you can
Anyway,
point
I'm
to.
not. Yeah, that's just the one thing that I'm just like, that was a question mark. That's all.
Oh, yeah. And actually, before we go to SoFi, I saw this question real quick. I don't know that we'll talk too much PayPal. I think we're just going to finish out on SoFi maybe. But I will say Evan made a good point on advertising and how amazing that opportunity could be for Robinhood. Like, if they are compliant, PayPal is. They've launched advertising. I think the market probably has to see the revenue and know what their goals actually are to be able to price that in. So I think $0 is priced in, but yeah, there's. I think that'll probably try to talk about that like relatively soon, but it's being slept on. So that's a big opportunity for them that they actually announced. Like, I had a post on this earlier today where they had, I think it was Sephora, that they had this campaign that went out, and the results that they had off of that, because I mean, PayPal, like, it demonstrates intent. They have a massive pile of data that's very, very specific to individual users. They know how to leverage it. They have, like, one of the best in the business, Dr. Mark Grather. What is the TAM on that? What is the size? How fast are they going to grow? Where are they going to reach? Those are things that we don't know, and I think the market needs to know. So hopefully they do a good job of communicating that. But I'd say that's the only main update with PayPal, other than payments are in kind of a stuck space. So, all right, let's talk SoFi as it relates to that Robinhood event. So one of the products that Robinhood announced was shorting. Shorting is available, or it's available soon rather, on the platform. Has not been previously, and so on Robinhood. And by the way, be careful with shorting, guys. If you don't know what it is, how it works, the dangers of it, don't do it, please. You do you. It's your money, but it's a tool out there. People can use it, and so they demonstrate, like they do with all their products, how it works. And they chose a certain company to short. Chris, remind me what the ticker was of that company.
I think it was SOFI.
That's right. Have you guys heard of SoFi before? Yeah, of course we have. So Chris, first with you, raw reaction to that. What do you think of the time? What do you think? Is it significant? Go.
I don't think it's significant. I kind of just shook my head and was like, why would you go there? But I think that they're just kind of poking the bear. Like there's a friendly rivalry, obviously, between the shareholder bases. I think that like Vlad and Noto are both aware of each other, right? Like they both said things. Noto kind of told Robinhood to stay in their lane a little bit when they kind of got into credit cards, and then Vlad's spoken about SoFi directly as well, and talked about like bank charters and where it's helpful and where it's not helpful and other things. So I don't know. I think it's more like a sibling rivalry than anything else, right? I think it's good natured. I like it doesn't really bother me one way or the other. It was just kind of a I don't know, like a playful jab more than anything else is how I interpreted it. I don't know.
Yeah. Well, okay. Let me ask you one other question there. Do you think it was intentional that they picked SoFi?
Oh, absolutely. There's no way they didn't that they did, like, with the amount of thought and effort that goes into planning these, there's no way that they were just like, oh, we're just going to pick some random company that's not in the S&P 500 and not in any indexes actually, and happens to just be one of our, one of the fintech rivals that we constantly talk about and are compared to. No,
Yeah.
that's not on accident.
So yeah, I think obviously I think it was very intentional. It's just poking back. My quick thoughts, and I want to hear from you, Steve, and then Evan. I think that this is a great thing, actually. Noto is a competitor. He from sports to business, like he absolutely is. And when you have this kind of Chris says friendly rivalry. They are, most of who their competition is actually the orthodoxy, not each other. There is some overlap on products, and so there is some competition there directly. But when you do things like that, like in sports, it becomes bulletin board material. You put it up there, you talk about it with the team, gets people fired up, and then they try even harder. And most of the time, not all the time, but most of the time, that's a really good edge, just that extra motivation. Because if you're just, there, like, I'm collecting a paycheck, I don't care, win or lose, whatever, to like, oh, they said that about us. They did that to us. Nuh-uh. No, we're going to execute. We're going to take the legs right out from under them. We're going to go, and as long as it doesn't become destructive, I think that this is a fantastic thing. And while I've seen SoFi accelerate in terms of shipping products, in terms of communication, they've done so much well. I think that this helps them get to that next gear. What do you think, Steve?
I don't think it matters at all. You know what Robinhood doesn't have that SoFi has? The whole lending platform. I mean,
Yeah.
It is what it is. You have rate cuts coming in less than 6 days, and you're going to see originations jump off the map in Q4. And then Q1, because you'll probably have 75 to 100 bips by then, by the end of Q1. So I think the loan platform is going to explode. And if the trends on the financial services continues, I mean, it does not matter to me one bit. I actually think shorting, I have to look into how Robinhood is rolling this out and how easy they're making it. I think this could backfire on them.
It looks really easy. It was just like click short and then.
Yeah, I think it is not easy to short in a traditional brokerage. Like, it actually takes steps and thought and planning. My first reaction was this does not end well for at least a decent percentage of their users. If it's as easy as it is for that they've made everything else, I could see this going very bad for people, and I'm very worried about how easy Robinhood is going to make it to short companies. It's a lot different when you short than when you use puts and you buy puts to have downside exposure, because your downside shorting is infinite. And I think people really need to understand they will get margin calls and they will have to keep putting up more capital. So I don't know.
Evan?
On that last point, shorting's a losing game. I mean, you can win at some points of it. Some people can do a good job, but it's a losing game. I think people also know that. I think people are bullish. I kind of brought up that ETF point. I mean, it's a little, I don't know. I do work with ETFs. I work with a lot of these 2X ETF companies. They all have 2X longs. They all have 2X shorts. You could argue why people are using them. But when stuff goes down, people do not buy the 2X shorts. They look and try and bottom fish on the 2X longs. People are inherently bullish. So I think that it's not going to be a big feature. It got an applause. I think shorting is a losing game. Maybe I'll play it once or twice. Maybe the IV is different around. Maybe it's like a thing around earnings. But I'd probably just play the 2X short. I don't know why you would short stocks, honestly. I don't know why you would use that, and I don't think many people will.
I don't think retail should short. Like puts, maybe. The leverage plays, maybe, but it's so dangerous.
It's probably going to be super high fee. There's going to be a select few amount of people who can go in and use it. It's probably not $100 million business. So it's going to be rolled into something else and add $5 million. I don't know how the revenue works out, but I think it's going to be used by a select amount of people. It's probably going to be a very high fee way to go to do it. It's probably going to be very easy. And it's just going to be a small piece of a larger segment printing them some money. I think that the SoFi one is an interesting area, a different one. Banking, right? It's in a very interesting place. The theme that I feel like is going to be the one going forward and will be a continuation is this consolidation theme. I think that there's, we've talked about crypto. There's a lot of rate cuts and other stuff like that. There is some good cross currents coming for banking over the next couple of years. That consolidation theme is probably going to continue. I really feel like these fintech names are the winners. I love hanging out on Fintech Friday. If you guys, I haven't said this at all. If you haven't subscribed to Roy's channel and anywhere else this is live, you are missing out. Who else is live at 11:30 p.m. Eastern on Friday? That's actually quite ridiculous, if you ask me. So if you're not subscribed, you are missing out. But yeah, it feels like banking's going for consolidation. SoFi writing those similar themes of Robinhood, of this wealth transfer, and being the platform that young people want to use. That do we need branches? We probably need some in-person stuff. Yeah, maybe SoFi ends up going that way. I don't know. Maybe it's the metaverse and we end up I don't know exactly what it ends up looking like. But to me, the SoFis of the world eat up a lot of these regional banks. And I think there's going to be a couple of them that end up into the next JP Morgans. No, JP Morgan will still probably be JP Morgan, but Wells Fargo, Citicorp, like, what are we doing? Those ones are ripe to be passed by one of the things. So I don't know if it's SoFi. Like, I have put money into it. I'm actually kind of excited about it. But yeah, I feel like, as Steve was saying, this is a very different business than Robinhood. And there is, equally as Robinhood, there is these really large incumbents. Yeah, for SoFi, there's a lot of older and larger incumbents that are really slow and not doing great and are probably going to get consolidated. And I wonder if SoFi goes on a bid spree at some point.
Yeah, we'll see. Hey, Chris, I think I want to end on this. Give you an opportunity. If there's something SoFi related, Robinhood related, Fintech related that you'd like to hit. Otherwise, I've got a question for you on a SoFi related thing. But is there something?
Nothing in particular.
All right. So payments, crypto payments, SoFi. What are your raw thoughts with that?
So my raw thoughts, I think that what they're trying to do, based on the comments, so Noto did have that the conference this week, right? And he talked a lot about stablecoin. So it was actually really, he provided a lot more detail than we've gotten in the past, right? They talked about using the Lightning Network right now, but it sounds like that's actually just kind of a stepping stone until they they launch a SoFi stablecoin. He talked about trying to build kind of bridges with merchants and go after basically try to find ways to extend Galileo in an embedded fintech way with these larger merchants and other people. I think what they're trying to do is they're trying to carve out a niche that they can call their own, where basically their whole shtick with retail is that it's a one-stop shop. And so I think what they're trying to do is they're trying to do the same thing with Galileo. So if you are, for example, like a credit union, or if you are a regional bank, you probably don't have the technology budget to be able to start offering your own stable coin. You're not going to probably go out and build the rails or have API. You're going to use some sort of APIs to access the rails into crypto. I doubt that these people have the tech savvy and just the engineering to be able to do that. And it's the same thing with like the embedded finance. So if you're, Walmart or Target or Walgreens even, or any of these kind of larger companies that are merchants, I think what they're trying to do, and I don't know if they'll be successful in it or not, but I think what they're trying to do is carve out a niche where they can come to you if you're those people and you're like, and they can say, listen, we'll take care of all of this for you, right? If you will give you your own debit program, you can have rewards if you want. If you want to access stable coins and crypto rails, look, we've already got a SOFI stablecoin. We'll do some revenue sharing with you where not only, are we going to charge a much smaller rate than you're going to be getting from Visa or MasterCard, but we will, even do some of the revenue sharing from the stablecoin APY that we're getting from the treasuries that are backing it, et cetera, et cetera. So again, whether or not how long that takes to implement, whether or not they're successful in that, I think remains to be seen. I think that they are. I think that they are uniquely positioned to be able to do that because they are a chartered bank and because they are regulated as such that people will trust them, right? Because they'll have done it on their own platform, and that other, regional banks and credit unions can look at that and say, hey, they've got this entire tech stack built out and we can just offer it through them, and there's no real downside for them to do that. So whether or not it takes off with, merchants and other things is another question. Whether or not even banking goes that way, and whether or not these regionals and credit unions and stuff even try to enter that market, I think there's still a lot up in the air, but I think they do have a much clearer vision for what they want crypto to be that I didn't fully understand, but I think we got kind of a peek behind the curtains that we hadn't had before. So it was a really interesting conference for that reason.
Yeah, I really like your take there. I think it makes sense in terms of Galileo as a product, more so than for SoFi directly to get into that market. We'll have to see if it works, but yeah, this is a good another nice offer for them. And I do hope that the Bitcoin network is just the intermediary for now, just to get things launched. Evan, Steve, do you have any thoughts on, and it's okay if you don't, on payment by crypto specifically, or SoFi Pay, getting into payments for SoFi?
Yeah, why are they using Bitcoin? Isn't that kind of like I don't know the answer to this, but it feels like, isn't that kind of dumb? Like I've heard people can argue them in for like SoFi for Solana or all the other ones.
Stupid.
Yeah, like what are we doing? Isn't that a little? I could understand Solana. I could understand a couple of those other ones, those layer ones, or maybe you make your own layer. Isn't Stripe trying to do that? Like, yeah, I guess, but I don't know. That
I mean, they're using a layer 2 on top of Bitcoin, right, with the Lightning Network.
Lightning,
but still, like this right here. I mean, they're we're sending it through the Bitcoin network, then into fiat on the back end, and so double conversion. First, you convert, then you send it through the Bitcoin network, then back in. And so this is not, it's cheaper for international, like cross-border payments, obviously, but anything else, it's really not cheaper.
I'm going to tell you something. You are going to get SoFi onto Ethereum. I need you to start tagging him every single day. Every day, he'll see it. And let's just tag him in Tom Lee videos. Great salesman, great pitch. I want that. Listen, by the end of next week, I'm expecting.
Noto is pretty embedded in the crypto space. He knows his stuff there, so I'm sure he's well aware of what's going on.
So very last question for you, Chris. Have you joined the cult of BMNR yet?
Oh, we had this discussion the last time I was on Fintech Friday. I had already joined at that point, right? We had that lengthy discussion about selling calls and puts and stuff. So yeah, I'm underwater on my covered calls, which I expected to be, and I'm fine with that. I can let those shares go and just take a profit. I think this is going to be probably take over a good portion of my wheeling portfolio, just because the premiums are so darn juicy, and I'm fine taking assignment because long term I'm okay with it.
Yeah, I apologize. I remember you were actually the one that made me get into it. So I'm just so tired.
I was gonna say.
And then, like, very, very last thing, just in case you hadn't seen it, Chris Patel got in.
I had seen this.
Called me the Pope of BMNR. I did a lot of spreading of the good news. Tevis made it a video using Grok. So here we go. Join the cult. not really, not financial advice. Be sure you guys do due diligence with anything that we said, with anything we mentioned. We're just some guys offering our opinions. Some very loud ones from Steve. Always love you guys, Steve,
I
Evan,
got
Chris.
2 things real quick.
Sure.
So I can't believe I'm going to say this, but Crawford over Canelo. That came up a couple of times in the chat. I already locked in my bets on that. Even though Crawford's
Did you bet on Robinhood? Where'd you
No, so I have a question on that. So for Robinhood, do you guys follow anything with gambling?
bet?
No.
A little
Alright.
bit.
So
little bit.
do you know how the big beautiful bill absolutely is going to decimate the gambling world in 2026?
No, I have not looked into that at all.
Okay.
Nope.
The very high level is right now you can deduct 100% of your losses against your wins. In 2026, you will only be able to deduct 90% of your losses. So let's say you throw $1,000 into DraftKings or any of these online apps, and you make a lot of individual bets. You win one, you lose one, you win one, you lose one. You end up churning it over, and you have $100,000 worth of bets, and you end up losing your $1,000, and it shows that you have $100,000 worth of wins and $100,000 worth of losses, and you have no money in the account. Technically, you can only deduct $90,000, and you'll have to pay tax on $10,000 at your tax rate, even though you didn't win the money, because now you can only deduct 90%. So I have a theory that if this doesn't get abolished from the bill, it's going to hurt gambling. So my question was, with the prediction market, if you win or you predict something correctly, is that considered short-term capital gains on the 1099, or is that technically gambling revenue where they issue a separate 1099?
So they're operating through a loophole. It is a sweepstake, is how these are legal.
It's a sweepstake.
Yes, that is the model. That's why these are available in different states and stuff like that. Fundamentally, these are sweepstakes models, what these prediction markets are. And it is a loophole. So there is a risk there that it might get closed. But, I saw a story today, Polymarket raising at 9 billion, Kalshi raising at 5 billion. I guess people are betting that these aren't. But yeah, sweepstakes model, whatever the legality of that is what I would say is my answer would probably be.
All right. And then my second question is, anybody worried about Netflix right now that if Skydance buys Warner Brothers Discovery, that's going to be real competition?
Where does $72 billion of debt go? I feel like they're just so way down.
I'm just saying, Warner Brothers Discovery has way better content than Netflix. Like, it's
Apple has better content than both of them, but we're not going to do anything.
Apple does not have better content.
Silo, Severance.
Oh my
come
God.
on.
Finals
Here we
are
go.
K-pop Demon Hunters alone is bigger than Warner Brothers.
That's true.
Wait, what?
K-pop
Demon Hunters.
I don't
Literally,
even know what
every
that
single.
is.
Oh my gosh, dude.
Everybody
Every
knows.
single kid in
Yeah.
elementary school, in
Yeah.
middle school, in high school, they have all seen this Netflix movie at least a dozen times. Like,
I don't know what that is. Okay.
every single kid that comes to my house
No,
talks
I
about
want to
this.
find this chart for
I
you.
guess it's because I don't have kids. I don't know.
I have
anything.
never,
Like,
Steve, I have never seen this. The chart, look up the growth of views on that one on watch hours. It's exponential compared to anything else. I've
really?
never heard
insane.
of it. I've never seen it. It's like growing faster than
I've
Squid
never
Games
seen it. I haven't
did.
seen it either.
What is
So-
it? It's probably
so-
yeah.
Yeah, Evan, find that chart, please, if you can. Quick anecdote. So I think it's a stupid name, stupid idea. My kids had seen it multiple times. 2 of them are adults, young adults, and then one of them is 12 years old. And they finally were like, "Dad, we want to watch a movie." I'm like, "Okay, what do you guys want to watch?" And they said that. I'm like, "Okay." And I watch it, and I'm not like blown away. It's like, but there's a lot of earworm in it. Like some of those songs really sticking with you. They've seen it multiple times. Everyone they know has seen it multiple times. Ran into at one of the events a doctor from Korea. He's a cardiologist. He's an investor, does certain things. And I mentioned to him, I'm like, my kids are all into this. One in particular really loves Korean culture, watches a lot and is into K-pop. And he's like, "Oh yeah, Kpop Demon Hunters," and he was all excited. Like it's incredibly well known. It's gone viral, and Netflix tends to have that again and again and again. And this kind of replaces that phenomenon we had when there was just live television. If you didn't catch it, you didn't catch it. Maybe you had TiVo at best. But everybody talked about whatever episode, whatever show. Netflix captures that better than anybody, even though I agree with you. Like, their content isn't the best of the best. No, but they have more hits like that than anybody. Evan, let me throw yours up here.
Apple needs to start buying sports teams is what they need to do.
It's an interesting concept. The NFL is worth what, like 200 billion if you go across everything. Obviously, it'll start going up.
I was saying they should buy Manchester United because it's a public.
No, how can you buy it when there's relegation?
Buy MSG so you get
because Manchester United's never going to be relegated because they've got.
They were like in 17th place last year. They suck.
Yeah, there's no way. They've got too much money.
But wait, so Exponential might have been
not neither here nor there.
Exponential might have been a little drastic, but it's
no,
the
it's
trend
not
has
drastic.
continued.
That's exponential because it's still going up. It hasn't plateaued.
Yeah, and this is a little old. Maybe we're closer to here, so I can try and update this. But yeah, like it was pretty big. I've never heard of this thing.
I mean, didn't the Lakers just sell for $10 billion?
Yeah, but it was part of the team, right?
I don't remember the
$10 billion
percentage. It was a big percentage. But I mean, Apple should take a year of buybacks and buy a bunch of sports franchises and take them off the network and put them right on Apple TV.
Can I ask you though? I am really curious. I'm sorry, Roy might just want to go to bed. I'm curious on the Premier League. I just fundamentally think there's a problem with investing in a team that can get relegated. And yeah, I guess you can pump money into it, but times change. I don't know.
But they've never been like the top 7 in the Premier League. Like, none of them have ever, United, City, Arsenal, Liverpool, Tottenham, Chelsea.
All right, so by intermediate Miami, whatever it is.
Sure, but I mean, well, Apple TV actually has MLS rights. That's one of the reasons that they were so excited, and that that when Messi came over is because Apple TV does own. I think they're exclusive. They have an exclusive deal with MLS right now, but there's nothing like the Premier League as far as viewership internationally. But those top teams, they're never going to get relegated.
Apple, Inter Miami. We got Meta. They go in and buy LACFC. Then we got the money to pump in. They're buying the best players. That's not actually going to happen. But I don't like I don't hate the buying the league. It's content. This is a content world. Sports is it.
I've been saying it for a while because they're the two that are going to be big in AR and VR. And when you think about the goggles or the glasses, whatever the form is going to be, if you buy a bunch of sports teams and you put them on your proprietary network, but you also add VR options to it, now you're screwing over cable TV. You're taking away assets from Netflix because Netflix is moving into the area. They're having the Canelo fight tomorrow night. They've already done the Jake Paul fight. And YouTube and Amazon are already getting in on NFL. Apple's obviously in on soccer. So that's the next leg of content, because that is where the big one's going to be college basketball. Again, those rights that you can't really buy universities. But buying these sports teams, it's not just about the content. You also have the apparel and all the other aspects of it. And it's more taking assets off the board. I'm surprised Warner Brothers Discovery didn't get bought out earlier. And I'm surprised that we don't have more mergers like Paramount getting bought out for the pieces.
Do you think that we're going to be seeing a lot of mergers coming up over the next little bit?
I do, because it depends. I want to say yes, but then I also think, and now we may be 2 or 3 years off from this, agentic AI or some type of whatever characteristic you want to say, where you actually make your own content. You talk into Netflix and it's a premier tier. So The Unit, 4 seasons, great show. I want a 5th season. I want to know what happens to Major Blaine. Make me another season of freaking The Unit. And I pay royalty rights or whatever that makes me a new season. I didn't like the way 24 ended with Jack Bauer just getting taken away in the helicopter. I want to know what happens. So Sons of Anarchy, I hated the ending. So I think that that's going to be the next evolution of content, where you tell it what you want and it makes it for you. I don't know how far off we are on that.
So do you okay, sorry, we can go to bed. I'm curious because that feels like the incumbent IP at that time will be what people end up just kind of going on into the future. And then like, it might not be new stuff. It will just be variations of old stuff. And you can kind of create like a marketplace of content. I don't know.
Yeah, they got all the books that aren't movies, like The Gold Coast by DeMille, one of my favorite books. Somebody's owned the movie rights for the past 2 decades because supposedly they got Al Pacino to sign on to play Frank Bellarosa. It's never going to become a movie. So if I can tell one of these AI things, hey, go read The Gold Coast and build me a movie out of it, that'd be freaking great. Chris, when is this going to happen? When is my dream going to happen?
Dude, you're asking the wrong person, but I can't wait for all the Brandon Sanderson books to also be movies and or series. Right,
Yes.
Roy?
Yes.
Okay, I feel so lost. Who is Brandon Sanderson?
The best.
The best fantasy fiction author probably ever, in my
Better
opinion.
than George R. Martin? Because I actually read
Yes.
A Song of Fire and Ice.
Token is better. Jordan
That's true.
is not quite as good. Starts off great, kind of loses steam. Sanderson completed that series, if you know the Wheel of Time series. Amazing, gifted author, prolific, writes on a variety of stuff. If you guys like reading, or if you're even not into that reading that much, there's science fiction, there's kind of steampunk stuff, there's fantasy that he does. Kids' books, they're amazing. Go read them.
I'll download it. I don't have time to read nearly as much anymore, but I will download it on Audible and listen to it in the car.
Yeah, Chris. If somebody, so Steve's just starting out. What book should he?
I'll download it right
I mean,
now.
either I'd start with either probably First Era Mistborn or maybe the Stormlight Archive, maybe the Way of Kings. The Way of Kings is really, really good.
Yeah. The only thing is that introduction is long, but
Yeah.
other than that, hang through that. If you're willing to give it an hour, then do that.
The Way of
But yeah.
Kings series.
Yeah. Well, the series is called the Stormlight
Stormlight,
Archive.
yeah,
The first
I'll-
book is called The Way of Kings.
It's
But
freaking
all of his stuff is so good. Even like anyway, there's like his kids stuff is hilarious. I listen to it like to and from school with my kids. We've listened to it like the full series like 3 times, and it's so funny. Anyway,
Chris,
it's
do
good
you
stuff.
use Audible?
Yeah, I do.
How
Yeah.
awesome is Audible?
awesome.
Yeah, it's the best.
so good.
Not
I
good
don't
for
know
authors,
what I
but
would have done without it. I've been using that for like 15 years.
yeah, long time for me too. It supplements my reading immensely, especially with the longer drive. I love that. So,
What's
yeah,
today's date? Did the new Vince Flynn book come out and I didn't even realize it?
Red Rising is good too. Whoever put that up.
yeah, really good. All right. Well,
On that note.
on that note, I'm going to put the Twitter links for each of these guys in the comments. If you guys are on X at all, be sure to follow them. Steve has brilliant writing on Seeking Alpha. He's one of the best writers, honestly. Other than Brandon Sanderson, his content is worth subscribing to. Evan, amazing for stock market news. That is his handle. He's so accurate, and I really appreciate you being on here, Evan. You're such a great guy. Chris, data-driven investing. I mean, like the brain on you. I don't know how you do what you do with all that you do from work to family to investing, but appreciate you guys.
I don't
being
know
on
how
here.
you have time to do anything.
Yeah, you guys are
I
amazing.
don't.
And we
I don't
and
know how you
audience,
figure it out.
for you guys sticking with us for almost 2 hours, this time of night. Thank you guys. We got the best audience in the world. You guys have a good night. Happy investing.
Wait. Did you end it?
I didn't yet.
Oh, you thought you were gonna get away.
No.
Listen, if you guys are not subscribed to this channel, to Roy's channel, we're here, but this guy's been hosting and moderating this entire time. I would say don't even subscribe. There's a little bell button there as well. Hit that. You'll see the streams whenever he goes live, the video, anything like that. But I mean, how many people are live right now? Roy is putting out some really great content, and if you enjoy this stream, I'm sure you would enjoy seeing more of it. So definitely subscribe. If you're already subscribed, hit that bell button. And yeah, now you can end it.
Appreciate you.
Maybe there is a 2-second lag, so maybe you want to give it a second.